Yeah, thanks, Matt. You really have to price for all outcomes, or really look at all outcomes here. There was really the Goldilocks scenario that was happening really for most of this year. So with portfolios, there really is a focus on liquidity. We've also been reducing some of our equity exposure, particularly in the domestic market, where we just don't see a lot of earnings growth. So, I think you really have to look at how a portfolio will perform in, a slow growth market, and then also if things do change, a trade deal happens and then growth starts to accelerate. So diversification is key.
All right, are you expecting a deal at least over the next day or two? We know that the conversations in Washington, D.C. will pick up a little bit later on today when the United States wakes up. What do you think lies ahead for the next 24 hours if we do get some more solid confirmation that, yes, a deal is still looking like it is going to happen?
Yeah, I mean, that will soothe markets a little bit. And as you said, Asian markets haven't dropped really at the moment because there is still expectation that something might be announced on the weekend. But I think we'll look past the 24 hours and into next week and the week after and just look at what sort of monetary and fiscal stimulus China brings to the market. That might give us a clue of whether they're prepared to wait out these tariff talks.
Just want to bring everyone up to speed on some comments we're getting out of China. It says it will take countermeasures against the US tariff hike on Chinese goods. It says it deeply regrets the latest US tariff hike on Chinese goods and says that the US-China trade negotiations are still ongoing. That just coming out of China, which of course is trading in the lunch break. Let's, Ed, talk about the currency when it comes to China. We have been seeing the yuan weaken. The midpoint's been set weaker over the last few days or so. I think we're around about a 3-month low when it comes to the Chinese yuan. How do you expect that is going to influence not only the discussions but also the China markets more broadly as well, and the Chinese economy?
Yeah, it could be used as a tool, a potential tool. It's weakened about 2%, and that will also be another clue as to how China are going to respond to the US. It will provide a small cushion, I guess, on the stock market and also the economy, but the main tool for them will be fiscal and monetary policy.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.